Good afternoon, everybody. Tom Fritz here, representing EFG Group as well as International Futures Group. The USDA had a bunch of numbers for us today, as did CONAB, the Brazilian version of the USDA. Starting with the corn market, CONAB is still suggesting a really big corn crop out there down in Brazil, 78.2 million tons. It was just off 200,000 tons from their previous estimate. USDA, however, says, no, not so big, just 75 million tons. So a little bit of a push-pull there. The USDA came out, massaged the U.S. corn numbers, suggesting that our corn carryout is going to decrease by 50 million bushels. Basically what they did is they raised feed demand by 50 million bushels, lowered ethanol usage by 50 million bushels, but then in turn raised exports by 50 million bushels. My guess is that with the lower ethanol grind means less DDGs for feed, not only in this country, but for export as well. So less DDGs would suggest additional corn usage, whether it be for feed in this country as well as export. The bottom line, however, was the corn market continues to spin its wheels, staying in the same trading range we've been in since virtually the beginning of February. So my big question is, are we just going to stay in this sideways range? My guess is we very easily could do that. We're waiting for the end of the month numbers when the USDA comes out with quarterly stocks as well as prospective plantings. Remember, the USDA told us in late February that corn plantings are going to be down close to 2 million acres. That in turn, I believe, is going to keep the corn market alive. But that's all we're going to do in the meantime, is just stay alive. As far as the bean market's concerned, CONAB did reduce their soybean crop projection by 1.2 million tons. USDA, however, left their number unchanged, so we've got a little bit of a difference there. But then when the USDA came out with the US numbers for supply demand, all the data was left unchanged. When was the last time you saw US data for soybeans being left unchanged? The end result, we've got plenty of beans in this country, we've got plenty of beans down in South America. Despite this reminder of ample supply, sure, the bean market finished a little bit lower, but it managed to hang in, honoring recent lows, and I think that's all about the possibility of another trucker strike down in Brazil. If Brazil can't get the beans to ship, that could suggest that the U.S. export program could last a little bit longer. No trucker protests, bean market's going to go lower. Wheat market, all the data was unchanged. So why did the wheat market finish higher, especially as the dollar's making new highs for the move? Personally, I think it was just all short covering, as in recent days, the speculative sector has really piled on to their net short position. So I think we saw some just short covering in that regard, whether it be flat price and or the intermarket spreads involving short wheat.